So check this out. On September 8th, if you just took a quick glance at the grain markets, you saw green everywhere. I mean, corn was up, soybeans were up, wheat was up. But if you looked behind those numbers, the market was anything but confident. In fact, it was holding its breath, just waiting for a showdown.
And that really gets us to the big question here. Was this green screen a sign of real strength? Was this some kind of new bull market? The short answer, nope, not at all. This rally, it wasn't driven by a wave of great news. It was driven by something else, a technical move that tells a story of some deep, deep uncertainty.
So what was really pushing things up? It's a little something called short covering. Think about it like this. You have a bunch of traders who bet that prices were going to tank. They sold short. But when the market doesn't go down, they start to get nervous, and they have to rush to buy back what they sold to get out of their bet. When everybody does that at the same time, it creates this artificial wave of buying that shoves prices higher and makes the market look way stronger than it actually is.
So that gets us into our first big point here. This wasn't some rally born out of genuine optimism. No way. This was a cautious, really strategic dance by traders who were just trying to get their ducks in a row before a massive piece of news was about to drop.
Look, the whole week, really, was all about one thing and one thing only. Traders getting themselves set for the U.S. Department of Agriculture's, the USDA's, supercritical report coming on Friday. The green you saw on the screen, that was just the opening act.
And this, folks, is where things get really interesting. This is the heart of all the tension. The entire market is basically locked in this fierce debate over what the USDA is going to say on Friday. And believe me, the stakes could not be higher.
Now you might be wondering, why is this report such a big deal? Well, up until now, all the USDA's estimates have been based on models, phone surveys, things like that. But this report? This is the first one of the season where they will actually use hard data collected from real fields. We are finally moving from projections to reality.
And this is where you see the two camps digging in. On one side, you've got the traders and the farmers, the people who are actually out in the fields kicking the dirt. They're seeing the damage from a dry August, from high nighttime temperatures, from disease. They are betting on a smaller crop. But on the other side, you have the USDA. And the USDA is like a giant government ship that turns very, very slowly. The big fear in the market is that they're going to take their classic slow and measured approach and not cut the yield numbers nearly as much as the market wants them to.
And that slow government approach? Well, as analyst Dave Chatterton puts it, the end result could be a really big letdown for anyone who's betting on higher prices. The market is screaming for a big cut to the production numbers, and it's looking more and more like it just might not get it.
And hey, just to pour a little gasoline on this fire of uncertainty, S&P Global went and dropped a survey on Friday that projected a record corn crop, even bigger than the USDA's already huge number. So you've got this complete split personality in the market, with totally credible arguments for both a much smaller crop and a record-breaking one. Talk about confusing.
Okay, but the USDA report, that's not even the whole story. There's this other massive geopolitical cloud hanging over the market, and it all has to do with the world's #1 buyer of soybeans, China.
Take a look at this. 0. That's the number. That is the amount of new crop U.S. soybeans that China has bought for delivery in this marketing year. Zilch. Nothing. An absolute ghost.
And just to really let that sink in, let's look at the history here. Last year, at this same time, China had already bought almost 4 million metric tons. The year before that, over 6 million. In 2022, they'd already booked over 11 million tons. This year's silence from them isn't just quiet, it's deafening, and it's totally unprecedented.
So it begs this really, really scary question that every U.S. farmer is thinking about. Is China making a deliberate, aggressive, strategic attempt to avoid buying any U.S. soybeans at all this year? All the signs right now seem to be pointing to yes.
I mean, look at what they're doing. This isn't an accident. They are actively paying more, over $1 a bushel premium, for Brazilian soybeans. They brought in a record amount of soybeans from South America in August. And, on top of that, they're stockpiling their own beans and selling them from government reserves earlier than they ever do. This is a coordinated, thought-out strategy.
All right, so you've got the USDA showdown, you've got the China situation. Let's zoom in a little some of the other stuff that was moving the market today, including some key chart levels, a sudden freeze, and the very strange case of the wheat market.
So here's kind of the play-by-play of how that short covering rally actually went down. Earlier in the day, prices started to drop, and they tested these really key technical levels that all the computer trading algorithms are watching. That's 415 for corn and 1022 for soybeans. When prices got down to those floors and couldn't break through, the computers kicked in, the traders who were short scrambled to get out, and boom, prices bounced.
And then, just to throw another wrench in the works, we had freezing temperatures hit parts of North and South Dakota over the weekend. Now, you'd think that would send the market flying, right? Some kind of frost scare. But nothing. The market just kind of shrugged. It seemed, for the most part, clearly disinterested. So for now, it's just another question mark in a market that's already full of them.
And that brings us to wheat. Man, what a weird market right now. Even with this mountain of bearish news about huge global supplies, the wheat market has just gone completely quiet. It's just trading sideways. And it reminds me of that old saying on the trading floor, never short a quiet market. It feels like wheat might be coiling up for a big move, even if nobody has a clue which way it's going to go.
So this whole vibe, this nervous energy, this sense of anticipation, it wasn't just stuck in the grain bins. It was spreading out to other commodity markets too, from livestock to energy, as pretty much everyone braced for whatever is coming next.
Wow, take a look at the cattle market. After an absolutely epic 10-week run of gains, the nearby futures contract finally closed lower for the week. I mean, it was one heck of an impressive streak, but the fact that it's over is flashing this big, blinking caution sign that the incredible momentum might finally be hitting the brakes. But it's really a tale of two different stories in the meat complex. Because while the cattle market is showing some signs of fatigue, the lean hog market is still running hot. The big speculative funds are holding a near-record long position over there, which means they're still betting that hog prices have a lot further to climb.
And you know what? Even crude oil got in on the action, playing the exact same game. Prices had been falling because everyone was bracing for bad news, for OPEC and Russia to increase production. But when the actual announcement came and the hike was smaller than everyone feared, that uncertainty was gone, and oil rallied on news that was basically just less bad than expected. So when you put it all together, what do you get? That green on your screen today? That wasn't the finish line. It wasn't a celebration. It wasn't the market giving a final verdict. It was just the quiet intake of breath before the plunge. It was simply the prelude to the real action that's coming later this week.
Which leaves us right here, with this massive question hanging in the air. The market is completely trapped in this tug-of-war. On one side, you have the bearish reality of huge global supplies and a missing-in-action China. On the other side, you have the bullish hope for a smaller-than-expected U.S. crop. So what's it going to be? Is Friday's data going to spark a surprise harvest rally? Or will it be the final nail in the coffin, a fundamental rejection that sends prices lower? The entire market is holding its breath, and we're all about to find out.